The market is struggling today, but there is one outperformer, Aster, the second largest decentralized perpetual futures exchange. So that's a platform that allows to bet on crypto prices with leverage without buying the asset directly. Now there's some news that's driving this rally. CZ announced a 2 million personal investment, and he is saying that he plans to buy and hold the asset. He's not a trader, CZ of course being the ex-CEO of Binance. There's also a Tokenomics update, as in half of the buybacks will get burned. And then there is the technical argument that Aster was oversold. Now this is the Aster price relative to the BNB price. Aster has been launched as a competitor to Hyperliquid, Hyperliquid being the largest perpetual futures exchange. BNB is the token of the Binance Smart Chain, and so we can see quite a bit of correlation between Aster and BNB. Initially, quite a bit of excitement. The token outperformed BNB by almost 300%. But since the 25th of September, we tend to see underperformance. And this is our recent rally. Aster is entering a market that's growing very rapidly. This here is the decentralized exchange perpetual futures trading volume per day over time. 3 years ago, this tended to be somewhere around 200 to 300 million per day. Now we are close to 40 to 50 billion per day. Here are the trading fees just on Aster that spiked up and is now normalizing on a lower level. Here is the decentralized exchange spot trading volume, because Aster also has a spot offering. That's because of arbitrage trading. But here's why we saw this massive rally in trading fees with subsequent decline. Aster pushed an airdrop. And so many traders simply did airdrop farming, as in they maybe went long one platform, let's say Hyperliquid or Binance. They were short on Aster. They didn't have any impact on the price with their position, but they would gain fees. They would gain airdrop allocation. The cutoff for that airdrop was on the 1st of October. And so that's why the fees normalized again. They're currently at around 2 to 3 million per day. So the capital that was on the platform spiked up to 2.5 billion and is now coming down. There are actually two reasons why the TVL is coming down. It's not just Aster specific. We see something similar for Hyperliquid. More on that in a second. But why are we seeing this underperformance of Aster relative to BNB? By the way, the potential upside is here another 40% outperformance. The potential downside is a drop of 26%. One of the reasons for this underperformance is potential doubts around the supply. Over the course of the next 7 years, the Aster supply will more than double. The team will get its first unlocks in September of next year. But it's always continuous airdrop money that's particularly dangerous, because that's spread out across many investors, and in aggregate, those investors tend to sell off this allocation over time. Because very often, just because a platform gets used doesn't mean that the token is very attractive to hold long term. Most altcoins tend to underperform Bitcoin and Ethereum most of the time. And so airdrop allocations are not that great for long-term price development. Now, relative to BNB, there still seems to be a bit of upside. But relative to other altcoins, it doesn't look that great. This is Aster relative to the market cap of all altcoins that are not in the top 10. And it appears as if we've already peaked and that we're now just waiting for the price to deflate again by 25%. The volatility relative to other altcoins seems to be lower compared to just relative to BNB. If you're enjoying this video so far and you're getting some value out of it, then feel free to give this a like. It will help the channel grow. It will help spread the word. Thank you very much. Let's compare Aster and Hyperliquid. This here is Hyperliquid, and it saw a massive crush of total value locked on the 10th of October. And maybe you still remember the 10th of October. On the 10th of October, most traders on those levered bets got completely wiped out. At least the traders that were betting on rising prices. We saw a flash crash. All prices in the altcoin market went down by roughly 30, 40, some even by 60, 70%. And then market makers picked up the pieces and bought in for the low. The entire cryptocurrency altcoin market went down by 47% in the span of a few minutes to just then recover. So many people got liquidated during that crash. And so people just left perpetual futures exchanges, including Hyperliquid, which is now stabilizing, but also Aster. So Aster doesn't only have the problem of the airdrop expiry, it also saw the outflows compound because of that flash crash. Here are the trading fees on Hyperliquid over time, by the way. It's roughly 3 to 4 million, which isn't that different to what Aster is currently generating. Maybe Aster is slightly smaller. Besides this relative valuation chart that doesn't look that great short term for Aster, there's also a potential knockover effect from Hyperliquid, because the Hype token will also see unlocks by the team, and that will happen much earlier. And so if Hype sells off, and maybe as an extension, due to correlation, Aster might sell off as well. Here, let me show you what I mean. This is Hyperliquid's Hype token supply over time. And we now finally see the core contributors getting some allocation. It's 400 million worth of Hype every single month from now on. And so if Hyperliquid doesn't see at least 400 million worth of purchases every single month, it tends to underperform. If that's going to happen, it might drag down Aster with it. Again, just due to association and correlation, there's a lot of arbitrage bots that sell one asset when a similar asset is also selling off. Short term, the price discovery does happen again via the perpetual futures. This is the Aster trading volume on Binance on the spot market, 661 million worth of trading volume. Compare this with the perpetual futures. Here we had more than 2 billion worth of trading volume. The funding rate crashed on the 10th of October. Again, during the flash crash, many longs got liquidated. It now also crashed to a similar magnitude again, because this time the shorts got liquidated. Open interest has recovered somewhat. There is positive correlation between the amounts of bets on the price and spot itself, and the trading volume with the recent price rally has come up. Again, caused by the recent news of Tokenomics and CZ's vote for the project. I'm not making any statement regarding Aster's development long term, but in the short term, it seems to have been quite overbought. In the short term, it seems that this has been a short liquidation event. Yes, there were news, but the rally lasted just to a level that we'd expect, right? Those lines are completely parallel to one another. And if you just connect all those bottoms with the tops, that's exactly what any trader would expect where the turnaround should happen. So really, the current momentum is rather bearish. I'm not too bullish for the next days for the Aster price development. What's going to happen in a month or two, nobody knows. But again, there are some risks in case the Hyperliquid token starts to sell off because of the unlocks, because the core team might take some profit. The Hyperliquid team is very, very small. It's less than 20 people, and they get 400 million every single month from now. Now, there are different ways to interpret the current market situation. What we see over here is a long-term chart of the stablecoin market cap. This starts in 2022. We had the Terra Luna collapse over here, where then the market tended to shrink until October of 2023. So the stablecoin market cap went down by 27%. But since then, this chart is going up. Now, when the stablecoin market cap is going up, that means people are moving their funds from the fiat ecosystem, from traditional finance, into crypto. People are sending their hard-earned cash, say, to Binance. Binance sends this over to a stablecoin custodian. The stablecoin custodian is buying bonds. The stablecoin custodian is making money via interest, issues the stablecoins, and the stablecoin issuance can be seen in this chart. So whenever this is going up, money is getting into the space. And that means crypto prices should, as per tendency, rather go up. How much should they go up? Have a look at this here. In red, we see the crypto market cap except the stablecoins. So all the cryptos, Bitcoin, Ethereum, and all these smaller cryptocurrencies. And of course, they tended to go up since the stablecoin market cap increased, but they went up more, right? 270%, while the stablecoin market cap went up only by 130%. But there is a catch here. I don't necessarily think that most cryptocurrencies will grow faster than the stablecoin market cap. Because here's the thing, there's not just the stablecoin market cap, there's also the degree to how much those stablecoins are getting deployed. Some people might just transfer their stablecoins to Binance, hold that in their wallet, and then wait for a while until they actually buy altcoins with it. The trading from stablecoins into risk on volatile cryptos, and from volatile cryptos back into risk of stablecoins, that's actually what causes the short-term fluctuations in the market. Because obviously the stablecoin market cap is going up much more smoothly than the prices, and that is because of stablecoin deployment. Now this here is the stablecoin dominance, and it trades between 5% and 9% of all of crypto. Have a look at this yellow circle here. This is when the stablecoin market cap tended to turn around, when there's more money flowing into the system. So from that point to today, we have seen the stablecoin dominance go down. So the market as a whole got more risk on. There's less dry powder on the side now than there used to be in October of 2023. When we actually compare 2 points where the stablecoin dominance was very equal, then we're getting a different picture. So this red circle over here is the same time with that red circle over here. And so the stablecoin market cap went up by 128% since the beginning of 2024, while the stablecoin market cap went up by 115%. So the growth rates are extremely similar. When the stablecoin market cap goes up by 10%, then crypto prices on average should also go up by 10%, maybe slightly more. But there might as well be zero difference if we just come a little bit more down in the crypto market cap. So really, the two growth rates are very similar. We have to work with how quickly the stablecoin market cap is expanding. And so how quickly is it expanding? In the last 12 months, it went up by 65%. In other words, if we don't see any systemic implosion, if we don't see something like the FTX collapse or the Terra Luna implosion, if the market continues to expand, then we should work with a growth rate of 64-65% per annum from here across all of crypto. That's how fast the stablecoin market cap is going up, and it's doing that expansion at a quiet, consistent rate. Now then we have to wonder, if we are in a bull market since October of 2023 and we are expanding at roughly 65% per annum, does this also mean that it warrants to get more risk on, to potentially buy more altcoins and potentially sell Bitcoin? Let's have a look at the altcoin performance since October of 2023 relative to Bitcoin. This point in time over here, this circle equates to this point in time over here. This is now total 3 ES, so the altcoin market cap minus the stablecoins relative to Bitcoin. So how did the altcoin market cap do relative to Bitcoin? And it actually went down. Bitcoin outperformed during this expansionary period. The altcoin market cap went down by 17%. The problem is that this chart is even underrepresenting of how bad the altcoins did. This here is much more representative. Remember, the stablecoin market cap went up by 65% in the last year. This is the performance of the smaller altcoins in the last year. Most of them went down. They did not on average appreciate by 65% or maybe a bit less than that, let's say 50%, because of this underperformance. The price performance seems to be much, much worse. And the reason for that underperformance is token unlocks. So early investors and the team and insiders, consultants, etc., they get token allocations over time. They get vesting periods and they can then sell those tokens. There are various pages describing the situation. This is coinmarketcap.com/token unlocks. We can see how there are several unlocks across many different cryptocurrencies. So let's say a cryptocurrency is at 1 million tokens, and then come all of those vesting unlocks. All the insiders get access to newly minted tokens. The supply goes from 1 million to 2 million. Then maybe the price gets cut in half, but the supply has doubled. The market cap of that altcoin is unchanged. But everybody that bought the altcoin, they lost 50%. So the insiders dump on the retail investors. And that effect is not seen in market cap comparisons. That's why we cannot use the others dominance or the total 3 dominance or even the Bitcoin dominance. The Bitcoin dominance should be much higher, as in if we just compare prices, not necessarily market caps. Let's have a look at a few of those altcoins here. Minus 99.5% over here, minus 99.9% over here. This went up initially, but from the top of 30 cents, this also crashed massively to 2 cents, because probably that's when the people started to sell. Then we've got here minus 56%, or over here minus 61% ApeCoin. And this is much more in line with this picture over here, right? Charts like this. Let's actually have a look at ApeCoin in a bit more detail. This is the number of circulating ApeCoin over time. We started at 284 million and now went up all the way to 940 million. So the supply more than 3x'd. And who got those tokens? Again, it's the insiders that dump on the project. They take the money. And so the straightforward approach would just be to bet on falling prices of most altcoins, especially on the altcoins that tend to have a rising supply. So when ApeCoin goes down, let's just bet on falling prices and get this return instead. The problem is that we do have a lot of volatility here. This is a crash of 74%. 50%. So betting on falling prices can also be a problem if there is positive news and we see a temporary rally in the price. But we can mute this risk somewhat. Because one of the reasons why sometimes those short positions can also be dangerous is because the market as a whole might go up. When Bitcoin goes up, when Ethereum goes up, then most altcoins go up as well. So really what we are interested in is the ApeCoin performance relative to Bitcoin. This is now Bitcoin divided by ApeCoin. And this is much less volatile. This only dropped by a bit over 50%. Have a look at the volatility of this chart versus this chart. Isn't it much better to invest in this instead of into this? All of those drops here were just the market itself going up. It was not ApeCoin doing particularly well. This, by the way, is a logarithmic scale. On a linear scale, this looks much more juicy. This is how we make money in crypto. And this is a very uncommon approach, right? Most people, they try to find the next hidden gem. They buy an altcoin portfolio. They have maybe 10, 20 altcoins. Try to find the next thing that does another 10 or 100x. But I don't think that's the best way to go about this. Do you really want to find a winner in a market that looks like this? Do you really want to scan the market and find the next wallet token that makes 53%, where at the same time Bitcoin doubled? I don't think so. I think it's much better to turn everything that's red on this chart to green and everything that's green on this chart, which isn't much, into red. I'm following this approach already for the last 4 years, and had I just dollar cost averaged into Bitcoin, I would have gotten the performance here in light gray. But because I also bet on falling altcoin prices, I got the performance here in black. It's a constant outperformance. It's not about finding the next 100x luck shot. And so I'm talking about the strategy in more detail in the premium membership of this channel. Here are a few trades that our members have shared that shorted various altcoins with high token inflation. And I made several videos on the topic as well. Now you don't have to watch everything over here. There's only 2 very important videos using perpetual futures to bet on relative valuations and risk management with relative valuation bets. Risk management is extremely important. Here's the first video, it's 34 minutes. Here's the second video, it's 28 minutes. And the reason why I say risk management is so important is because there is a lot of volatility within the perpetual futures market as well. And if you don't know how to handle leverage properly, if you don't know how to do proper position sizing, then you will lose your funds. You will not make this kind of returns. The recent shakeout in the market actually helped us. It was one of the best weeks we've ever had. We made 10% on our copy trading capital pool. Now, once you've joined Premium and you've watched the 2 videos, I will share my favorite trade with you. It's something like ApeCoin, but better. If you don't make money with that trade when holding it for 1 month, then I will refund the membership fee for you. So really, you're not risking that money. You're not risking the 125 US dollars. If you're not making money with the trade that I'm sharing, I'll just send that money back. No questions asked. Now I've talked about this trading pool over here. This was a project launched in July of this year. Again, where we were following relative valuation trades. Everybody that got in this is already up 19%, where at the same time Bitcoin lost 9%. Now unfortunately this capital pool is already closed, but if you're part of the annual members, you will get access to the next pool in January of next year. Feel free to check out the tutorial video of the last trading pool. Again, it's an approach to bet on charts like this without having to execute the trades yourself. I simply just trade for you. I'm of course sharing all my trades to every member, but if you want to become part of this project, then you can also consider joining up for the annual membership. So that's over here. You're also saving $250 per year doing so. But you can simply start off with the monthly membership and then switch over to yearly afterwards. A link to Premium pops up directly here on the screen. Just click on that. It will lead you to the website. If it's the very first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in Premium. Cheers!